Indian benchmark equity indices Sensex and Nifty50 witnessed heavy selling pressure in trade on Tuesday, December 17th. The Sensex ended 1,064.12 points lower at 80,684.45. Meanwhile, Nifty lost 348 points to settle at 24,320.3. BSE Sensex shed as much as 1136 points or 1.4% to hit a day's low of 80,612.2, while its NSE counterpart Nifty50 lost 365 points or 1.5% to the day's low of 24,303.45. Here are the top 5 reasons behind the stock market crash today. The first one, of course, anxiety over the upcoming Federal Reserve meet. Investors chose to stay on the sidelines ahead of the US Federal Reserve's monetary policy outcome on Wednesday, December 18th. While expectations are ripe of a quarter-point rate cut from the Fed on Wednesday, uncertainty over the Fed's rate cut path in 2025 persists. Dr. V.K. Vijaykumar, Chief Investment Strategist at Geojit Financial, spoke to Mint and said, "Globally, markets will be looking forward to the FOMC outcome on Wednesday. Markets have already discounted a 25 basis point rate cut, and therefore the focus will be on the Fed chief's commentary. Any departure from a dovish commentary will be negative from the market perspective." He mentioned that this, though, is a remote possibility. The second reason, of course, is the fears of FII selling. As per market analysts who spoke to Mint, the market is under pressure amid reports that China is planning to increase its budget deficit from 3 to 4% in 2025, which is likely to pressure the FII's inflow in India. This is possible as the market expects a rise in the stimulus package in China. The sell India, buy China factor may work against the Indian stock market, and this is the primary reason for selling pressure in the Indian stock market. This comes amid FIIs turning into net buyers in the Indian stock market after 2 months of back-to-back selling. The third reason is the increase in India's trade deficit. The sharp spike in India's trade deficit to $37.8 billion in November will put pressure on the rupee, pushing it almost 85 to the dollar. V.K. Vijaykumar of Geojit Financial said that exporters like IT and pharma will benefit from the depreciating rupee, and for importers, the import costs will increase. This will have an impact on their stock prices. The fourth reason was the global market cues. According to a Reuters report, Asian stocks wobbled as traders braced for a slate of central bank meetings this week. In stock market, Australian shares rose 0.82%, with Japan's Nikkei down 0.15%. MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.3%. Futures indicated a subdued opening for European stock markets, with Euro Stoxx 50 futures down 0.16%. Last but not the least was the technical outlook. Anand James, Chief Marketing Strategist at Geojit Financial Services, spoke to Mint and said, "The rise in volatility index yesterday is suggestive of caution. This sets up room for extended consolidation with prospects for further slippages." Among Sensex stocks, ITC and HUL were the only constituents in the green, while the remaining 28 stocks were trading lower. HDFC Bank, Reliance Industries, Bharti Airtel, TCS and L&T were the top index drags. Meanwhile, in the Nifty50 pack, only Cipla and ITC rose, while Shriram Finance, Grasim, Hero Moto, Bharti Airtel and JSW Steel were the top losers.